Okay, good afternoon, everyone, and welcome to our training this afternoon, where we'll be looking at this will be the first of our Forex Build Your Forex Robot workshop. Now, the whole aim of this workshop is to show you how you can build trade automations for your strategies and how you can build profitable systems, and how you can go about building profitable systems that can enable you to trade automatically, right? So it's going to be interesting. If you have questions, type in your questions and I'll come back to them. Okay. So my name is Nana Obina Alexander. I'm the head market analyst here at Anzo Capital. And I'm also, the senior educator here as well. I'm a trader myself. Been doing this for close to about 8 years right now. Sometimes called the FX Jedi. And I've been, I'm also the head analyst I was the head analyst at Ivy Market and Gemini Cap Market, and I'm going to be a host for this series, right? There are so many other trainings that you can also enjoy from me as well. So here is what we'll be running through, the content of what we'll be going through today. So we'll look at, trade automation. Everybody, I'm assuming that we're all traders in the room. Now, every single one of us knows something about Forex robots. We all do. If you don't, maybe not to the same degree, but we all know something about Forex robots. You know that you can build trade robots to just automatically place trades and close trades on your behalf. So what I'm going to do in this first session, so like I mentioned, this is the first of many, right? It's a workshop. And during the lifetime of this workshop, we will be building 2 robots from scratch to finish. We'll build 2 EAs from start to finish during the lifetime of this workshop. So it's going to, the whole idea, the reason why I configured it this way is such that it will help you to be able to do what's possible, see what's possible, and how you can automate your system. That's the goal, to help you automate your system. I'll come back to that in a bit. So the first robots, the first one we'll be building would be a indicator-based EA, and then the second one would be mostly based on price action. So you'll be able to see what's possible, and then with your own creativity and based on your own strategy, you can see how you can do that as well. So from now till the end of the session, not this class, this is just the introductory class, during the lifetime of the workshop, we would get it done. The EAs that we build, I'll send it out to everyone so you can use it for your test purposes as well. Now, why trade automation? Why is everybody so freaked out about trading robots, right? Now, as traders, you all know that one of the key things that we lack is the ability to just stay in front of the charts and watch for opportunity or scan for opportunity. And well, you need to live your life, and you can't just sit in front of the chart and you can't trade every single perfect. So sometimes you have the market does perfectly meets your criteria, but you're unable to take those actions, take the trade because you were not there on your charts to see those criteria met. Hence, the need for building trade automations. Now, another very important reason as to why Forex robots, I think, is because, well, robots don't have human emotions. As humans, we are flooded with emotions, the emotions of greed, the emotions of fear. These are some key emotions that tend to affect our decision making. Not for the good, unfortunately. They tend to affect our decision making poorly. And robot or trading automations don't have this because, well, they just simply follow the instructions you've laid down. Hence, the reason why robots are something that kind of, it has a set of rules. It follows those rules. When the criteria are met, it executes based on those parameters, and then it does it over and over again. When it comes to trading success in trading is based on your ability to take in, to execute unemotional decisions, so you have criteria met, you take unemotional decisions over and over again. That's the only way that you can become really proficient in this business. So in a sense, in order to become a very good trader, you more or less have to start functioning at the level of the Forex robots. Now, I don't mean that quite literally, but that's the reason. That's just kind of like explanation as to why Forex robots are something that tends to be used, and when you can have the right system, right, then it can be very, very powerful. Now, Forex robots are not all good and joy. They're not all fun and games. I'm sure you all know somebody, or you've experienced personally people who have lost money based on, because of robots, mostly because the logic behind the robots is not sound. So if you have a logic that is not sound and is not sustainable, you have results that is also unsure and unsound. And or sometimes you have people execute a very sound robot in the wrong environment. So it's the robot in itself, is creating a robot is important, but what is even more important than the create robot itself is actually the logic behind it, or what I like to call the ingredients, the recipe, right? Or the strategy, right? So the way I like to always do my things is to follow is somewhat like a top-down analysis, where we actually break down into what is essential, know what we're trying to do, and then know how to get it done before we actually start building. So think about it like baking, right? So you're trying to bake a cake, or think about it like you're trying to build a house. You don't just start by building the house. You actually start way before you start building the house by drawing the plan, getting the architectural and the architectural design right, and getting all the measurements on point even before you lay a block, right? So you have to do the structure, the strategy, or the recipe before you start. In the same way, if you're trying to bake something or you're trying to make a dish, right? If you want to get the desired result, then you have to follow the recipe. So when it comes to trading robots, it's actually the strategy first approach that you want to be looking to implement. Therefore, it's essential that you have this kind of mentality when you're considering robots. So it's not just, so even if you're buying a robot from somewhere or you're using a robot, you want to understand why it does what it does, why it makes those decisions, so that you can know how best to deploy it. So for example, you can have a robot that is designed to trade in a trending market. If you apply that in a ranging market, it's going to struggle. If you try to force it in a market that is ranging, you find yourself struggling. Similarly, if you have a robot that works best in, like a scalper EA, and is work best in the ranging markets, and the market starts to trend, well, it will also struggle. And if you don't understand the logic behind it, well, before you know it, the struggling becomes so big that you have either irrational losses or blown account entirely. Okay, so it's very important that you approach it with the strategy first mentality, because this way you have a higher chance of succeeding. Okay, so what we're going to do is explain. Okay, so when it comes, just like I've been talking, when it comes to building robots, it's the recipe first, it's the strategy first. I like to use analogies. So I'm going to use the analogy of making a cake to kind of explain the concept of why we go through the strategy first approach. Now, so if you're trying to bake a cake, right? There's usually a recipe. So you're trying to make velvet cake, chocolate cake. There are different types of cookie, whatever it is you want to make. In order to get the actual desired result from obviously the chef or whoever owns the recipe, you need to follow the recipe the way it is. So for example, let's say, in order to make a cake, there are certain ingredients that are required. So you need like flour, you need sugar, let's say if you're trying to make chocolate cake, so you need chocolate, obviously. Now, but there are also certain instructions besides just flour, sugar, and all of the things that you need to make the cake, but you have to also do it in proportion. So for example, you need to put 2 cups of flour, and then you need to mix it for like X amount of time. And then once you have that, you need to put, I don't know how to bake, sorry, but then you put all the necessary ingredients in order for which they should appear. And then you most likely would have the results that you're expecting. However, if you decide, well, I have all the ingredients. So even if you have all the ingredients for the cake, right? So you have the ingredients for making a perfect velvet cake, and you have them in proportion. So they say 2 cups of this, 1 teaspoon of that, 1 that of this, you have them lined up. And then you decide, well, I'm going to do this in my own way. So I'll take the flour and maybe beat it with the egg and then bake it. Put it in the oven. When it's out of the oven, I will come back and mix it. You just get something that is very, very different from what you're trying to accomplish. So in order to get the results, well, you have to follow the recipe. Not just have it, but then follow it. Now, why am I spending so much time explaining this? Because the truth is, most traders don't even have a strategy. And I'm not understating it. Actually, most traders don't have a strategy. So they understand how the Forex market works. They understand that you could make money whether price is going up, or you could make money whether price is coming down. But well, they don't really have an approach to the market. It's like trying to start a business and you don't have a strategy as to where you get your suppliers from and the markets to which you sell it. Well, you don't need the prophets to tell you that that business will fail, which is the reason why most traders fail. Now, your job is not to worry about the percentage of people who fails. It's to worry how you can become part of the small percentile of people who are consistently killing it in the market. Now, in this case, we're looking at build a robot. So either in the case of a Forex robot or in the case of actual trading, the robot is not in isolation, because this whole workshop is not about giving you a particular robot and telling you this robot works. The idea is to help you see how you can build trade automation, how you can build your robot for yourself without even having to code. Before you think about, before you think about building robots, you need to understand programming languages. You need to understand, all of those IT type core terms, and know how to be proficient in it to even start building these things. And not everybody, can do that. But with this system, you can automate your strategy, without coding it. All you just need is just the creativity to clarify what you're trying to do, and then the desire to get it done. Okay, now enough time on that. The goal of spending so much time explaining all of this concept is to drill deep into your brain that it should always be about the strategy first approach, right? It should always be about the strategy first approach, because the goal is to make money, right? But what will make you money is a system, or in this case, a strategy. I don't care what strategy it is, whether you are a trend line type trader, whether you are a support and resistance type trader, or a price action trader, a smart money type trader, whatever it is, have a system, like have a defined rules for trading. So have a trading plan. Now there's a video on my YouTube channel on trading plan, why you need one. Go do yourself if you want to watch that. You'd really love it. Okay, so back to back to business. Now, like I mentioned before, now you need to understand programming and how to program on the MQL language to be able to write, build, Forex EEs. But right now, you can learn to do this even without any coding required. Hence, we're providing you this top-notch education. And Anzu Capital, we are a very, very reliable platform. We are actually one of the only fully non-daily index platform here in Nigeria. And it's a platform that, you wouldn't find things like reports, slippages, and all of those stuffs you find out there. If you don't understand the meaning of non-daily index platform, you could just easily Google it. But the basic understanding of the basic explanation of that is the fact that when you're trading on a platform, you wouldn't find things like, you don't find, there's no conflict of interest, because on many platforms, because they daily index system, your wins are their losses and your losses are their wins, you might start finding some sort of market manipulations of stuff. Anyway, back to base. So we provide you trainings, not just this. So we have other exclusive classes. You also have the ability to be able to enjoy the ability to join our live trading classes, where you have the opportunity to trade live with myself and with some other traders as well. So you want to definitely be trading on the platform. Now, like I mentioned, the workshop is going to be, quite a number of trainings. Before we get to the end of it, we'll be building 2 EAs by the end of the workshop. You should have learned how to build 2 EAs, and then that should provide the foundation for you to more or less be able to build your own automations for whatever it is that you want, right? Now, what's the process? I always like to go through a structured approach to most things. So everything I try to do in life, right? Now, this pointers, you can do a screenshot if you wish. When it comes to developing an AE, defining the trade logic is extremely important if you're going to get the results that you so desire, right? So you need to be able to answer these 4 questions, or these 4 pointers, right? The goal should be that you need to break down the reason for your strategy, right? Like, before you even start building the robots, you need to have a strategy, and then you need to be able to break down the reason for the strategy in such simple terms that you can then implement it, right? Now, so one of the key things you want to figure is, okay, so what would trigger my buying decisions? Hence, confirmation. So what you refer to as confirmation is, so what would trigger my buying or selling decisions? Now, some people use different things for figuring out reasons to buy or, or try to figure out reasons to buy or place trade. Some people would look at maybe the indicators, like maybe the RSI indicators, the MACD or stochastic, and say, okay, if it is overbought and there's a bullish candlestick if it's oversold and there's a bullish candlestick, well, I want to buy or stuff like that. Or if there's a bullish setup, Now, it can also be things like maybe the moving average. If the moving averages are crossing over, whatever it is, you define simply what trigger your buying decisions. What will you be looking for? Or what should you be looking for? What criteria or what conditions should meet before you buy? And what conditions or criteria should meet before you take a sales? Once you have that, that will be number one down, where you have you've clearly defined your reason for trade execution. That means, why am I buying? Why am I selling? The next point to be, okay, so how do you enter the trade? So for example, if you're saying, okay, I want to use, your trade is based on if RSI is maybe oversold, and then maybe you have a pin bar or an engulfing pattern, that would be like, okay, so this would be signs or confirmations. And then how do you trigger the trade? Well, maybe at the close of the pin bar, you can say, at the close of the pin bar, maybe you enter with a buy stop at the high of the pin bar, or maybe a 50% retracement of the pin bar. However it is that you decide to trigger the trade, that will be, however it is that you trade, that will be how you actually enter the trade. So it's based on your system. Notice that I'm not teaching you any particular thing. I'm teaching you, the goal is to help you to figure out how to build automations for your system, right? So this would involve, you would have definitely be looked at this over time, back tested it and see the potential result, and then decide how you want to automate this going forward. Now, once you have that explained and locked down, the next point there would be, okay, so how do you exit the trade? Because entering the trade or, placing a trade is just one step. Placing a trade doesn't make you money. Closing a trade does. You don't make any money when you place a trade, but you can make money when you close the trade, because, well, if you buy at a certain price and price goes all the way up, it doesn't mean anything until you close, because if the price comes all the way down, well, you make a loss. So except you close at this point, that's where you make money. So you need to figure out, now that I know why I should be looking to buy or sell, now that I know how to enter the trade, then how do I exit this trade? So it's all based on your system. So maybe you say, now there are two types of exits. So there's the exit for profits. There's also the exit for loss, right? So in case you're wrong, how do you, where's your stop loss? And when you're right, well, how far is your take profit going to be? Now, let's say it's the moving, it's a pin bar oversold type condition, and you see the pin bar setup, market is oversold, and you're trying to buy, and everything meets, and then let's say you're buying at the 50% retracement of that candle and the market trigger. So where your stop loss be? So your stop loss could be simply just below the low, 10 pips below the low of that candle. And then where your target would be, maybe you could just target 2-to-1 risk to reward ratio or something like that. It could be very simple. Whatever it is, however it is your system works, or you're looking to build this, well, you just define that, make it clear. If you're using another indicator to determine when to close, so maybe you don't want to close this trade until maybe the RSI enters overbought, well, fine, you can also define that, and that could be your reason for entering and your reason for closing the trade. Okay, makes sense, right? So we have 1, 2, 3 on lockdown. The fourth one is not it's optional. So in terms of how you manage trade, trail stopping, and all of those things, but you can also have that included. And then you have your process clearly defined. To define your process, clearly explain what triggers your buying or selling action, how you enter the trade based on your system, how you exit the trade based on your system, then obviously probably how you manage the trade when the market is going just the way you want it, or even when it's not going how you want it. So all of those things. So, when sometimes people use some style of martingale system where, okay, well, I'm buying, it doesn't go up, it comes down, maybe I try to get into at least 3 more positions or something like that. All of this is still based on your trade rules, the logic behind your system or what you're trying to do. And, you have that set up, and then you can, build your robots to actually implement your desire. Okay. So far, so good. I hope we're all on point. I hope everything is making sense. Remember, if you have questions, just simply type in your question in the chat box, and I will come back and respond to it. Now, during the lifetime of this workshop, like I mentioned, we would actually be building 2 robots, right? We'll be building 2 trade automations. We'll be building, the first one would be a moving average. It's going to be a moving average crossover type strategy. So we're going to be looking at price in relationship to the moving average. So our buying and selling decision is going to be based on the indicator. In this case, we're going to be using 2 moving averages, right? And then after that, we're going to then build. Now, we're not building any of these things now, but during the lifetime of this workshop, or with the second automation we'll build will be based on a candlestick setup. So the reason you can see that it covers at least the 2 different categories of traders. Some traders are trade based on what we call it, based on indicators. There are others that look to trade based on candlestick setups or candlestick patterns. So and obviously you can combine, you can merge, you can try and just entirely up to you. You can merge a combination of setups, a combination of indicators, a combination of that probably in conjunction with candlestick setup. You can have a system or a robot that actually looks out for those opportunities for you and takes action for you when those things trigger. Now, also remember, sometimes you don't need to build a robot to actually trade for you. Sometimes you can just build a robot to maybe alert you, to notify you when certain things are done. That can be just what you're trying to do as well. And you can also have that built into the system. Okay, so now what we'll do is, what I always try to do when I'm building trade automation is I usually go through the same process. I start by always laying the foundation by setting up kind of like a document that explains what I'm trying to do. So those processes, these 4 key processes that we explain, I like to have them clearly documented. And then I like to build flow charts to explain how the, kind of like how the EA would work, basically, so that when we're building, it's quite straightforward to go on reference points and then just play around it. Okay, so what we'll do now is we would take the we wouldn't be using any robot today. We would actually start off by laying the foundation for the first robot we build. So the robot we're going to be building is the moving average crossover system. We'll build that and then we'll optimize it. And then once we optimize it, and remember, we won't just build, we'll test it, we'll back test it, and then we'll optimize it, and then we'll try to make it even more profitable, right? And then once we have that set up, we'll also build the next EA, which would be the candlestick pattern type of EA. And remember, I will be giving out, I'm sending out all the EAs, the file to the EA, so that you can also test it for yourself and try it out for yourself. Remember, all of these are for educational purposes only. These are simple EAs that we're building for you to be able to see what's possible, and then you can go and use it for educational purposes as well. Now, I'm going to now go over to try and more or less explain just the concept. Remember, I've been saying something about strategy first type approach to trading. So we're going to look at exactly what we're trying to do and why, right? So I'm sure everybody, all the traders in the house understand this. It's a very quite simple system. But we're going to look at, okay, the why we're looking at what we're doing. Remember, I said it's always the strategy first approach. Now, the basic idea with this system is the fact that what we notice is when the market is bullish, right? When the market is bullish, price tends to make higher highs and higher lows, right? In the bullish markets, we see that price tends to make higher highs and higher lows. And in the bearish market, we tend to see that price tends to make lower lows and lower highs. So let me just bring up my, where's my free hand? So, okay. So in the bullish market, price tends to make higher highs and higher lows. And in the bearish markets, we find that price tends to do the reverse and make lower lows and lower highs. But what we also figure is when we add moving averages to our charts, it turns out that, well, obviously you can add, when you add moving average, you also get the opportunity to set the period or more or less the parameters to it. So if you add the bigger the parameter or the period that you set, the further away price is from, or the moving average is from price. So if you have a 10 period moving average, it will be further away from price compared to like a 5-period moving average, right? But either way, whether in an uptrend, what you find is that, so, okay, no, that's not what I'm trying to do. Either way, what you find then is that in an uptrend, well, price tends to, when price is moving in an uptrend, the moving average tends to stay below price. So I don't know what I'll call this color now, is going to represent our 5-period moving average. Now, in an uptrend, you will find that it tends to stay below price, right? Didn't draw that properly, but it tends to stay below price. And in a downtrend, it tends to stay above price. So, but if we have two moving average, one of them, let's say the 5-period moving average, and then let's say we have another moving average, and this one we're going to make it deep blue, and let's say this one is like the 12-period moving average. Well, you would find, okay, no, you would find that, don't mind my drawing. So now this drawing is not going to be perfect, but you get the idea. So this light colored one is the 5-period, and this dark colored one is the 12-period. Now, in an uptrend, we tend to notice that price stays above both moving average, and in a downtrend, price tends to stay below both moving average. Now, but what we notice is that in an uptrend, both EMA stays above here, but the slower one or the faster one is above the slower one, right? However, in the downtrend, that faster one is below the slower one. Now, this illustration might not be a exact illustration of what it looks like, but you get the drill. In an uptrend, the fast EMA tends to be above the slow EMA. And in the downtrend, the fast EMA tends to be below the slow EMA. But here's the point of interest. At some point during the changeover from when the market goes from uptrend to downtrend is what we call a crossover. That means the point where the market, where both EMA cross, below or above themselves. Now that point usually tends to, in an ideal world, tends to signify the start of the next trend. That means if we use that as a reason for buying or selling, we can try to capitalize on the move or on the next move in the market, right? So basically, this whole system or this whole trade idea is taken based on, okay, we're making this decision based on where and when these EMAs are crossing over each other. Now, my hope now will be that we clearly understand the system that we're trying to build and why, right? So the trade system that we're trying to build, we understand it and why we're trying to do it. So the strategy first approach, like I've been mentioning for a long time here, this is what we just did. We just, explained our strategy and why we're looking to trigger, execute trade decisions. So now going to a real chart. Now, for example, you'd obviously need to play around the particular ones for the particular, let's say, instrument. So maybe for Euro USD, 5 and 12 might not work. It might be 10 and 20 or 20 and 50, whatever it is, based on your system that you've looked at and you feel, okay, this works a lot and I would like to automate it. Now, as you can see, in a downtrend, the EMA stays below, while in an uptrend, the EMAs stays above price. So you can see in this case, for instance, the EMA will stay above price, okay? So now we understand clearly what we are trying to do. Hence, so this is our document, right? Our documentation that kind of like explains what we are trying to do clearly in clear written terms that we can always reference, okay? So yeah, it has loaded up. So I always tend to do this for, if I'm using whatever AES, I always usually have a Google Doc file, that I can always reference back towards, okay? Now, so as you can see, well, we have the name, title of it, but here's the, we have the requirement. So this requirement, okay, so what does this strategy need? Well, for this one we're building, it requires the 2 EMAs. One of them we're going to refer to as fast, the other one we'll refer to as slow. the EMA we'll be using is the 5-period and the 12-period moving average. So that's the requirements. Now, how do we make our decision? So you can see what I just did here is that slide that I showed you that I said process. So we'll define the requirements. Now, how do we get into the trade? Well, for buys, in order to execute a buy, we want to see that the 5-period moving average is crossing above the 12-period moving average. So we want to see that the 5-period moving average has crossed above the 12-period moving average, right? And then to look for sales decision or sell opportunity to execute a sell trade, we want to see that the 5 EMA has crossed below the 12 EMA. Right, so now here you have it. We have our definitions of, the terms of service, if you wish. But this is the definition of our trade execution. Next, so how do we exit the trade? So we have our requirements, we have our reasons for buying or selling. Now we also want to look at, okay, so how do we exit the trade so that we can cash in those profits? Well, for this EA, we can actually use a hard-coded stop loss where, let's say we have the crossover happen and we have our trade executed, and let's say this, we get into the trade here, we can just simply set a hard-coded stop loss. Let's say like 40 pips above and try and target like 80 pips, however it is you wish, 20 pips, 10 pips, 20 pips, whatever it is, you can impute the parameters. But I'm not going to be doing that. For this system, we're going to actually be using a dynamic stop loss, right? Because it is a trend-based indicator. That means it capitalizes more, it works more in a trending market. When the market is trending one way, you find that this tends to work quite well. Right? And then because if you get into the trend and most times it will stay in that trend, well, instead of just making 20 pips or 40 pips, you can end up making 200 or 300 if you can capture the majority of the move. Now, this is our system. You're not going to probably get out at the highest point or at the lowest point, depending on whether you're buying or selling, but you will get out at least close to the highs. That's the whole idea. That's what we're trying to accomplish. Therefore, instead of using hard-coded stop loss, we're going to do something different. Every trade will be closed based on stop loss. There's not going to be take profit. All our trades will be closed based on stop loss. Why? Well, remember, we're looking to buy when the 5-period moving average cross above the 12-period moving average. However, we will stay in that buy position until the opposite condition is intact. That means if we buy because the 5-period cross above the 12-period moving average, we'll want to stay in that position until the 5-period crosses below the 12-period moving average. So we bought because the 5-period moving average or the fast crossed above the slow, but we'll close that when the fast or the 5-period crosses below. But what you notice is that this same instruction for closing the buys is also the instruction for opening the sells, right? The instruction for closing the buy is exactly the instruction for closing the sells. So what that then means is, well, it will close the buy once that is met and then instantly open the sell. And then the opposite, the reverse will be the case for the sell, where it will continue to stay in the sell position until the reverse conditions are met. So let's see, if it sells because the 5-period moving average has crossed below the 12, it will continue to stay in that sell, and then it will only close it when the 5-period moving average crosses above the 12. I hope this all makes sense, right? And then with this way, if the market is trending, we would stay in the market for most of the condition, most of the trend. And now would not get out at the highs, but at least we'll get out close to it. Now, obviously, you can manually close it whenever it is you want, or that's entirely up to you. But right now, the point I wish that I have drilled down into everyone is the understanding that, okay, we understand clearly what we're trying to build. And what you notice is it makes our building much easier. It makes, once we start, it makes it much easier. But this is not even all. Once I do this, I always like to build, one thing I always tend to like to do is also, just draw out the flow chart for the way it works. Now, so I already have this drawn out. Now, one of the first things, so once we've deployed our EA, the EA is going to check for trade conditions. So what this means, therefore, is that it's going to check to see if there are any open trades. That means if it has any open trade, because the EA, for every trade it takes, it's going to identify it. So it will always be able to see itself. It will always be able to see that it has a running trade, right? So if it checks and there is a running trade from itself, not like you manually imputed the trade, but a running trade from the EA itself, well, you can see it will take this part and do nothing, right? Now, it doesn't exactly do nothing, but just for this first point, just think about it. If there's an open trade, well, it does nothing. However, if it checks and there are no open trades, then it will continue down and run the rest of the code, right? And what would it do? Well, it will check the moving average. So there are two moving averages that were imputed. There is the 5-period moving average, and there's the 12-period moving average, right? Now, if it checks the 5-period moving average, it's going to check for this. First of all, it's going to check that is the 5-period moving average crossing above the 12-period moving average. So this sign, X greater than, stands for crossing above, right? And then obviously X less than stands for crossing below, right? Now, so if it checks, is the 5-period moving average crossing above the 12-period moving average? Well, if the answer is yes, then it means the condition for buy is met, and then it will open a buy at the close of that candle. Now, remember, it's going to be doing all of this check at the close of the candle. We want to avoid those spikes downward, and we want to avoid, those range. Sometimes a condition, the moving average might be looking like it has crossed, but then the markets end up reversing before the close of that candle, and it doesn't really cross. So we want to use the close of the candle. Now, if it checks and the 5 is not crossing above the 12, well, what would it do next? It will check if that's not valid. That is, if the answer is not yes, that means the answer is no. It will look to see, okay, is the 5-period crossing below the 12? If the answer is yes, then it will open a sell. Or if the answer is no, then it will do nothing. Okay, so it will check the condition for buys. If it is met, it will open a buy. Else, it will check the condition for sells, and if it is met, it will open a sell, else it does nothing. Now, we have clearly defined what we're trying to do. We have also explained the flow of how it will work. Now, but this is just to help, just the flow chart to help open a trade. Now, how does it manage trade? How does it close those positions? Well, I also have a flow chart for open positions, right? Now, remember in the first one, we had to look to see, okay, is there any open trade? If there's an open trade, we do nothing. Well, it doesn't really do nothing because, well, what it does is, if it checks and it sees there's an open trade, there are only two types of trades, is that a buy or a sell. Now, if it checks and the open trade is a buy, it will run this parameters. That means it will check to see, okay, is the 5-period moving average crossing below the 12? Remember, it bought because the 5 is crossing above the 12. But anytime it checks and it sees that it's a buy trade, it will keep checking the close of the candle to see if the 5-period moving average has crossed below the 12. And if the answer is yes, then it will close that buy trade. And remember, this condition is also the same for opening a sell, so it will open a sell. Now, if it checks and it sees that the 5-period is if it checks and it sees that there's an open position, but the position is a sell, well, it will go down this path and check to see if the 5-period moving average is crossing above the 12. And if the answer to that is yes, well, it will close the sell trade. And this is also the sign for opening a buy trade. Hence, the sells will be closed and the buys will be open. And this way, this EA would actually continue, almost always have a trade, right? Except you can also set parameters like, okay, don't take more than X amount of trades per day or something like that. Or minus that, it will always, because once it's closing a buy, that would also be the conditions for triggering a sell. Okay, does that make sense? Okay. Now, at this point, I expect that we understand, like, it should be drilled in your head, the strategy. Like, the strategy should be drilled inside your head. Like, you know the condition for buying, you know the condition for selling, you have how you manage yourself out of those positions, and you're like, boom, okay, so this is, I'm sure you can explain this to a 5-year-old or a primary school or a secondary school, and they would understand what you're trying to do. And that's the best way to get things done. Once you can simplify it to a very small, very low level, it's very easy for you to then, break it down and build it back up. Okay. So now we are set to begin the actual building of your Forex robot. Now we're going to be building this together. We're going to be building this live, right? But we're not going to be building it in this session. This is a 1 hour class. We're just about at the end of it. You're prepped for the next class. In the next class, we would actually start building it. But what I'm going to do now is show you the tool we use for building it. And then in the next class, I'll show you how we actually would build it live together. We will test it. And then in the next class after that, we would actually optimize it, because when we, remember, everything needs optimization. Android has improved. Everything is always upgrading. So the idea is to try and refine it to filter out bad trades and maybe look to hold on to trades longer or whatever it is, but just be in the positions and make your profits run more and cut your losses and avoid trades that have a higher chance of failing. Okay. Okay. Now, the tool we use for building, or we're using for this workshop is actually called the FX Dreamer, right? So the FX Dreamer, this is what it looks like. It's actually very nice, very, what I say complicated? It's not complicated in the sense that it's quite easy to use once you get the hang on it. But it can be, you need to understand there are lots of functionalities. You could do almost everything with this. Like, you could literally do almost everything with this. It's just down to your creativity and how you spice it up. Now, during the lifetime of this workshop, you should have an understanding of how we do this. You understand some of the best practices. You understand how we set up things. But it's just, you simply just drag and drop. You want something, you drag it, you drop it, you modify it to fit exactly what you're looking for, and boom, you have exactly what you want. But we would be breaking this down even in the next classes and the subsequent classes after that. Now, this is paid for. That means you have to pay for it to use it. It's not owned by us, obviously, but you have to pay for it to, you can use it, but you can't get the raw file of what you've builds unless you subscribe. It's not expensive. It's just, I think it's about $140, $150 per annum. I think so, something like that. So it's not expensive at all. It's quite cheap. You can also, I think there's a 3-month plan. There's also a 1-month plan. There's a 6-month plan. So you can, test it out for yourself, like so that you can build robots, download it, and use the raw file. Okay, but remember, all the robots we'll build during our workshop, I'll be giving it out to you guys, so that you can test for educational purposes. So keep that in mind. Now, so this is where we come to the end of this first session, and I hope you enjoyed the class. And remember, we would have a next session on Monday, and then we'll also have, so there's a next session that will be on Monday, most likely. There's also a recording. So this recording, remember, this would be available if you're watching this from the YouTube. So remember to also like and subscribe. So during the lifetime of this, we're going to have a lot of fun building robots, answering your questions, and seeing how you can get all of these things done. So remember, in order to join in the next class, you actually need to have, if you don't already have an account with Anzo Capital, you need to have an account with Anzo Capital. So I'm sure probably your account managers, you got the links from your account managers, they'll probably reach out to you, or you can just reach out to them if you haven't. So maybe any of my colleagues from which you got the links from, it might be me as well. Just reach out, create your account, and then at least to join the next class, which will be where we start actually building the first part, right? However, the real fun part of it, where you now start getting more and optimizing it and doing a lot more, would be in the 3rd class and the other subsequent classes, where we'll build them, complete them, really test them, optimize them, and then give it out to you. But those classes would be exclusive, in the sense that you're not paying for them, but you need to have a funded account with Anzo Capital. I feel that is fair, because normally this knowledge is pricey. If you're going to lend this, you probably would need to pay, but it's free. All you just need to do is at least have a funded account. And just once you have that, it's not just this. You also have the opportunity to join us in our live trading rooms, look for trade opportunities, be in the Telegram group where at least give signals. So lots of perks that you can take advantage of once you are a funded client on the platform, and I'm sure you're going to love it. So right now I'm going to take the next few minutes to take some of your questions, and then we'll call it a day. So I hope you enjoy the class.